Hi, and welcome to Dollars and Making Sense, a weekly program about money, finance, and investing on Radio Northern Beaches and broadcast nationally on the Community Radio Network around Australia. I'm your host, Ray Treverson from OTG Capital, and today we are welcoming at the microphone from the Australian Shareholders Association, Fiona Balzer, who is the Policy and Advocacy Manager at the ASA. So welcome to the microphone.
Thank you, Ray. I'm glad to be here. Good to talk with you.
Wonderful. So what we normally like to do when we have a new person on the show is, can you give the audience a little bit of a background? You know, where is your history? Where have you been? You know, what, I guess, lends you the credibility that says you know what you're talking about. So give us a little bit about your background and where you've been.
Okay, my perhaps saying who I am. I'm a person who really enjoys companies and the personalities of companies. And so when I started my career, after doing a few trainee roles, I became an equity analyst for a large fund manager. And for the next decade or so, I was looking at the Australian listed market for a superannuation fund and other funds that that particular entity had. And I was a specialist in industrial companies. I did the transport sector. I looked at entrepreneurs, had a really great time for entrepreneurs when they were blowing themselves up with the Adelaide steamship issues. And I then evolved through the transport to become a specialist in health and telecommunications as well. And so I got to see these companies come to the market. Some of them come into existence from just an idea in a founder's mind. I got to see them leave the market as well when, you know, as I said, blew up. Some blew up.
When they implode, yes.
When they implode, when the money stops and the talk keeps going. So I really find that experience has been quite helpful in my career and helpful with my policy and advocacy role. So deep knowledge about large listed entities. And then I had an interest in corporate governance and what's called environmental, social, and governance issues for companies at the end of my equity investment career. And I did a stint as a board performance assessor where we would go into the companies and give a board performance assessment. And then I joined the Australian Shareholders Association for the first time for a few years. And it was great.
Just very quickly, that's ESG. So when you were talking before about environmental, social and governance, many people would see ESG mentioned in I guess, in advocacy, but also in how companies are framed and also evaluated. So that ESG element is quite prevalent as well, isn't it?
Quite prevalent, and a lot of people will say it's come to the market recently, but I ceased being an equity analyst at the start of the noughties. So it has been around for a long time. One of the entities I worked with in the 1990s. We had superannuation funds who have very long timelines and have to be interested in how the company will produce profits for a very long period of time. And they were very strongly interested in the ESG elements of the company to produce better returns over those 10, 20, 30-year time horizons. Wow. So that background I have found very helpful in the remainder of my career. And when I first joined ASA, the Shareholders Association, I was first there for 03 to 07. It was really helpful, I think, having someone who understood transactions and how corporate transactions work, how companies report, and elements of governance, which is really ASA's strong point. ASA has been around for over 60 years and really was focused in on the need for executives and boards to do the best thing for their company and their shareholders. And now, as ESG evolves, their stakeholders, because there's a recognition that all those interests actually come to one. If you look far enough ahead, you need to have your social license to operate. And just through looking at so many companies, I have a lot of experience of when that goes poorly, and the likes of HIH. And then I did another stint.
Yeah,
Yeah.
I'm fascinated though that I see, Fiona, that in between your two stints at ASA, that you spent a bit of time at the Millionaires Factory, as they euphemistically called Macquarie. And when you talk about social and environmental and governance, I mean, does that happen at Macquarie? I'm just curious because the focus there is very, very, I guess, wealth oriented, and you spent some time there. Can you briefly tell me a little bit about your time there?
Yes, I can. I, ASA is a not-for-profit. When you think not-for-profit, quite often you need to think not very remunerative after a divorce. I couldn't afford to remain employed by ASA. The Millionaires Factory level at Macquarie is actually very high up in the executive echelon, so not something that I got to experience, but there was an opportunity to join their wealth management in their independent equity investment area there. And again, that's something where my background, both in ESG and equity investment, obviously helped, but also in engaging with retail shareholders and learning about their concerns and how they interpret financial data, company communications. That really helped going into Macquarie, which, if you look at the timeline, I don't know if people will recall that end of 2007 was the sweet spot in the equity market, followed by the is it or is it not global financial crisis, which turned
Yeah.
out to be one in 2009. So for the retail investors who invested through Macquarie, having access to their institutional investment house, their international economists, was really beneficial to be able to understand the subprime crisis as it was happening, rather than as a test case or a review some years later. That what we would do is we would use the institutional investment research, and it would be shared with the retail investors, and we would package up questions for those equity analysts. But we also wrote more generalist material, which relied on the team having had that equity experience or the economist experience, and then being able to communicate with people with different interests. When I first worked for ASA, I had to learn to speak more slowly, because as an equity analyst, especially on the buy side, so buy side is the superannuation funds, sell side is the stockbrokers. So my first experience was on the buy side. We would typically talk with people who were, if they weren't doing the same sector as you, they were equity analyst specialists. And we just knew so much and could communicate in such a narrow way because we all use this terminology in exactly the same way. We all interacted with the broking analysts and their research in the same way. So you could have shorthands, which retail shareholders used to find quite irritating when I was at Macquarie, because we were speaking the same language and had so much to say. But when we were talking with retail investors who come from a broad background and broad investment interests, we had to be reminded that you couldn't use an acronym, because an acronym in an oil company might be different from the acronym for a
I
telco,
guess so. I
telecommunications
guess so.
company. But
And
when
so
you're
you've
only
come
talking to
full
your tribe,
circle.
yeah,
Yeah. And so you've come full circle. You're now back at
yep,
ASA as a policy and
yep,
advocacy manager, and you've been there
yep,
for this next stint for over 5 years. So
yep.
specifically, what are you doing at ASA now?
So with the policy and advocacy role, we have really two streams in that. Um, we have the company monitoring, where we have volunteer members of the Shareholders Association who will engage with companies as a representative of retail shareholders. We receive proxies for many companies that are listed on the market. We will engage with we'll have a pre-AGM meeting with the chair or non-executive directors of the company. We'll evaluate how we will vote all the resolutions at the AGM, the annual general meeting. We are given proxies by shareholders who, like us, believe it's really important that they vote at the annual general meeting, and
Yeah,
we take
I've
that
got
very seriously.
I've got this as one of my questions, I guess, to you. You know, when people are thinking that they're just a little small cog in a very, very large wheel, they sometimes wonder whether their vote is of any value. But I guess you're there to tell them differently, aren't you?
Absolutely. I really think it's important for people when they are investing to, you can let your investments run, which means you can get on with life, but every now and then you need to sit down and reflect on your companies. One of the
Hmm.
good things to do is to update yourself with the annual report, because unlike all the other information that comes 1 week at a time, day after day, that annual report, someone has sat down and said, this is how it was for the last year. The auditors have gone through it and said, yes, this is how this should be presented to you. It's your chance to say, hey, is everything as I have expected it to be through the year? Is this keeping in line with my expectations? Should I keep the company? But then when you look at the notice of meeting for the annual general meeting, it's also your opportunity to tell the board whether you think they are doing a good job. So
So isn't it kind of strange, though, that when you think about the fact that we operate in a capitalist society, that enabled ASA, I guess, is engaging in collectivism by utilising, I guess, the votes and the proxy votes of many shareholders, and being able to collect all those votes together to be able to represent a body of people with the same vested interests. I mean, that's in effect what we're doing, aren't we? We are being able to gather together people of like mind to say, hey, board of directors, we want you to do something. Isn't that the general, I guess, view of being able to vote as a group?
Let me see, it is such a complex concept. Simplistically, any vote that you make or don't make, if you vote against something, the board is left with no misunderstanding that you don't like a some particular outcome. Usually they can figure out what that outcome is because there's other communications. You write to them, you send ASA an email and say, please, can you get your monitor to consider asking this question? Whereas if you don't vote, or you vote in favour, or just give the chairman an open vote, they're more or less entitled to assume that you are okay with how that company is running.
Exactly. Yep.
When people give the Shareholders Association their vote, what their proxy, they're relying on us to apply our guidelines, which we have on our website, which we discuss with the companies. And generally those guidelines are designed to have better outcomes in decision making by the board, and to be fair application of remuneration, for example. So we apply those consistent guidelines without somebody having to figure it out themselves.
Great.
We also take on board what people are saying about companies. So we have a group of members who will be quite free with their opinions, and they differ. So when we say collective, there are particular people who group together votes who have a specific purpose, whereas our purpose is to represent the retail shareholders. So
Wonderful.
we
So look, it's
spend a lot of
about
effort on
time.
that.
So it's about time right now for a short break here on Dollars and Making Sense. I'm here with Fiona Balzer from the Australian Shareholders Association. We're going to take a short break and we'll be back in just a moment. Hi, and thank you for listening to Dollars and Making Sense, a weekly radio program about finance, money, and investing on Radio Northern Beaches and nationally on the Community Radio Network around Australia. The views, comments, and opinions aired during our program should not be construed or viewed as financial advice. Any commentary is general advice only and does not take into account your objectives, financial situation, or needs. You should consider whether the advice is suitable for you and your personal circumstances. If in doubt, you should contact an authorised licensed financial planner. We welcome questions and feedback, and you can get in touch with us via our blog, social media channels or email. Please search for Dollars and Making Sense in your favourite podcast platform or check out our blog at otgcapital.com.au/blog. And welcome back, ladies and gentlemen, to Dollars and Making Sense. I'm your host, Ray Treverson, and with me today at the microphone, I'm really pleased to have Fiona Balzer from the Australian Shareholders Association, who is in charge of policy and advocacy. Now, before we went to the break, Fiona, we were talking about proxy voting and monitoring, and I know I've spoken with your CEO, Rachel Waterhouse, before about the incredibly valuable role that monitors, play in day-to-day operations at ASA. We're not going to focus on that today. I really want to now move the conversation to some of the policy aspects of work that you've been doing in recent times. And you've given me, wow, you've been really busy. There's some incredibly important elements of submissions and policy that I guess are being considered by, what is still a new government, given the fact that they've not been in government for even a year yet. But there's really quite a lot happening. There's a lot of things, working around superannuation. And there's a big federal budget that's going to be considered, and lots of changes in the financial services industry as well. So I guess in the short-term landscape that you are dealing with directly, Fiona, what have been some of the really key submissions that you've been, involved in and bringing together on behalf of the association?
Okay, I'd first like to say that it has become busier in this last year, but also there didn't seem to be much movement in the landscape up to the point when I joined ASA again in 2017. But then, of course, we had the Royal Commission and the like, and we had many areas where the ASA was called on to represent retail shareholders. So when we say retail shareholders, we mean people who aren't professional investors and don't have huge amounts of money. And there's over 6.6 million such shareholders. They're all really different. So
when
we're
talking mums and dads, if I use that term, sorry to interrupt, but I guess we use that term mums and dad investors, but this really is that core of the vast majority of Australian investors that aren't professionals and don't do it every day.
And along with the mums and dads, now we've got the millennial band as well. So we've got the young investors who are understanding the importance of compounding their returns and their saving for superannuation purposes, just as the mums and dads are closer perhaps to saving for their retirement. So they're a very diverse group. They can be impacted quite differently because of their different aims and goals. So when the government's making these changes, it's all very well to have the professions and the lawyers and the accountants and the companies laying out what they see as the best outcome. But at some point, everybody needs to engage with those large number of people who have small holdings, the retail shareholders. And that's where I see ASA's position is quite critical. And we spend a lot of time listening to the people who raise issues with us and distilling that for the regulators. So going through COVID, capital raisings in that situation, that was representations we carried out. And then hosting virtual AGMs, whereas in the UK, they just almost did away with annual general meetings and the companies did what they wanted. In Australia, we had the regulators and everybody working to give access to all shareholders and making sure retail shareholders could speak to their companies and raise points.
Right.
More recently, we've had an interest in, as we talked before, about ESG. One of the submissions we've done this year is about enabling the sustainability standards, which are going to have global application. They'll come into position this year, but won't apply until I think it's 2025. But we've made submissions to the Australian regime so that they can adopt those standards, because all the laws were set up for financial standards rather than these sustainability standards, which do have a long-term risk and cost. It's just accounting standards think of things in 12-month lots. The sustainability standards are, though, going to allow investors to make long-term decisions because of the information they'll have. So we made both our individual submission on that particular consultation, and we joined with the peak bodies in Australia because access to capital is really important. It benefits retail shareholders that our companies can raise capital offshore as well. So we want to facilitate that, and just to make sure that the government and Treasury are aware that, yes, retail shareholders think that's worthwhile. And then the other big changes that have been floated since the new government came into place were changes to taxation laws which apply to superannuation. There's a bunch of people who have really huge balances. Some of those balances, it sounds like they're getting a free ride in some ways because those funds aren't taxed. Although the way we tax super is we tax super on the way in, whereas many countries actually don't tax the money going in, they tax the money going out. So I'm not saying there's no tax in someone who's got a $400 million balance. It's quite often it's been achieved with post-tax returns, but it seems an excessive amount to have the privileges of superannuation. So tax concessions. So
I'd certainly like to focus in on that one, I guess, Fiona, because one of the things that you've been advising on is legislating the objective of superannuation. Now, on Dollars and Making Sense, I can tell you we've spoken about super ad nauseum, and I've had a lady called Natasha Panagis from the Institute of Financial Professionals Australia, who is their superannuation expert, and having trained myself in super and SMSF when I did my RG 146 as an advisor, it's near and dear to my heart because a lot of my own clients, for example, in my fund are SMSF participants and the like. Now, one of the things that we've seen, certainly in general discourse and particularly through COVID, is a lot of discourse in the media and the fourth estate about what is the purpose of superannuation. And we saw the previous government enact legislation where people started using super, certainly, I believe, counter to the way that I think when the original masters of the whole concept of what super was all about, it got, I think, waylaid. And so I think one of the things that's really important now, and I'm looking forward to seeing what ASA has to say specifically on your advice to Treasury when legislating the objective of super. This is something that has not been done before, and I think it's really worthwhile discussing because people need to sit down, I think, and be codified, and I think look at some framework that says, guys, this is what super's for, and anybody else that comes in from the edges start saying it's for something else, go back to rule one, this is what super is for. I think, and again, I'm putting my own personal opinion forward here, but I think that can do the market a tremendous amount of good, given, I think at last count, we're talking $3.2 trillion, something like 600,000 or 700,000 self-managed super funds out there now. And so I guess if you're able, are you able to give the ASA's view on that guidance on the objectives of super? I mean, you've said you've been listening to a lot of people. What have they been saying in that space?
We had quite a number of our members were approached us and were fearful that the rules just will keep on changing and that there will be tweaks and the like, and that they felt that this particular objective of super was actually designed to somehow harm the way they were managing their fund for the future. But we hark back to the fact that the idea of an objective of super was actually raised by the previous government before the Royal Commission. So there were lots of things that were about to happen in 2015 and 2016 that would then diverted into fixing the issues that were revealed in the Royal Commission into Financial Services. But what we have seen is there's a huge amount of assets in that area. That makes it a target for government who see it as a big pool, makes it a target for scamsters who see that money as potentially something. And we saw this through COVID, where people were encouraged to take advantage of the ability to take that money out and put it in unproductive, mindless purposes. So it really does remind you that having a big pool of money where it is actually decided what that money's for, and everybody's clear about what that money's for, is a good thing. I was minded when we were writing our submission, where we do agree that the objective of super is to allow the establishment of self-funding of retirement incomes that are reasonable and fair. We understand that the system has to be sustainable, which means that it cannot either be too unfair to some parties or suck out so much budget that it can't be funded, because as we've seen, we have some inequities in our economy and our tax system's a little bit unbalanced. To be able to be clear about the objective of super hopefully will allow us to then be able to talk about what measures do need to be made to change the system so it is equitable and fundable for the hereafter. But the other thing we see also is that with superannuation, you're deferring spending that may actually be needed now, which is why when COVID was happening, people were allowed to withdraw the money. Assessments of whether that was ever a sensible thing showed that it wasn't really used to make sure your children didn't starve. It was often spent on
certainly was.
inappropriate things. Silly
I
things.
guess,
So yes, having an objective is good. We think that it should be a dignified retirement. We think it should be a fair amount as well, because you do end up with media parlaying it as the really rich people having too much money, whereas to actually fund your income and keep off the pension, the aged pension, the government aged pension, you do need to have a set of assets that will generate income.
I guess, look, one of those things, Fiona, I did want to ask you today about intergenerational wealth transfer within super, because that's certainly one of those big facets. Unfortunately, we are just about out of time. Look, I see so many questions in some of the topics that we've covered today. I'd really like to have you back on the show, because I still see, ESG in of itself is an incredibly interesting and diverse topic that I'd really like to engage with you a little bit more at another time. But look, we're just about out of time today. Ladies and gentlemen, I'd like to thank you, Fiona, for being on the show today. And thank you, ladies and gentlemen, to listening to Dollars and Making Sense, a weekly program about money, finance and investing here on Radio Northern Beaches and nationally on the Community Radio Network. I'm always pleased to have members of the Australian Shareholders Association come along. Fiona, I know this is your first time. I hope it won't be your last. And until next time, thank you so kindly for being on the show.